Hey everyone, this is Josh here with Invest with Matt. I hope everybody's had a good week and a good Friday as we head into yet another weekend. For me, week started out really good post the earnings for Hood, but then I took a bath on some put credit spreads, lost about 26K on that. Um, but all things considered, the week still ended up pretty good with the long calls that I was able to sell. Fortunately, when Hood was still up in the mid 60s a few days ago. So managed to dodge a bullet there. But we're not here to talk about Hood today. I wanted to bring up SMCI. They filed an 8K today. I've seen a lot of misinformation online about this 8K. Some people speculating that it's not good, that based on the way it's worded and the way it's set up. But that's not true. And we'll talk about why this 8K is important, because this was the filing just showing the closure of their $700 million in convertible notes that they were able to raise. So let's just walk through it real quick. First, the new convertible notes for the $700 million. So those come with a 2.25% interest rate, which is due in 2028. The initial conversion price for these is $61.06 per share, which is 50% over the reference price. I think it's around $40. These can be converted to about 17 million shares. There's standard protections in here, like anti-dilution adjustments, and there's no immediate, red flags that I see with the terms of the new convertible notes. Amendment to the existing 2029 notes. So amended interest rate is amended to 3.5%, from where it was previously. The new conversion price is at 83.44, which is 105% premium over the reference price. So there had to be a pretty big jump in price for this conversion to be able to take place. About 95% of the holders, $1.64 billion worth, agreed to the amendments. So I think that says a lot about their confidence in SMCI, even given the SEC issues that they're experiencing right now. Maximal potential dilution is 42.3 million shares. The changes here are routine for refinancing, so there's nothing there. There's capped call transactions in here. The company has amended the existing capped call agreements. The new cap price is $94 per share, and these are just standard hedging instruments to reduce potential dilution, which I don't know if that's them thinking that it won't go that high to 94. But I mean, who knows? This is mainly just to state that none of these things are atypical for an 8K filing when it comes to these convertible notes. Overall, there don't appear to be anything in here that's concerning about this filing. The company is engaging in just typical financing activities. They raised new capital, like we said, $700 million. They restructured the existing debt, and they maintain, the hedging positions here. The terms appear pretty standard. The high participation rate of 95% in the amendments to the existing note suggests that these creditors are very confident. The dilution potential is clearly disclosed, and the conversion premiums are reasonable for this type of instrument. So anybody saying otherwise is wrong. And then that leads me into the last piece here. I think this is pretty important observation to make, that this was able to close with such confidence from the people who are investing here in these convertible notes, given the concerns about the 10K filing deadline that's coming up on February 25th. Reasons why, investment banks and institutional investors would, you think they would do extensive due diligence ahead of the closing. And meeting SEC filing deadlines is a basic requirement. A missed 10K deadline could trigger defaults in both these new notes and the other debt instruments. The company, like we said again, the secured agreement for 95% of the existing holders to the amended terms. These are not, retail traders. These are sophisticated investors who are clearly comfortable with the company's filing status going into next week. The convertible note market is pretty conservative. Any uncertainty about SEC filings would likely prevent a deal from closing. So this closure makes me think that they got some sort of reassurance from Charles Lang, the CEO and chairman, ahead of this date on the 21st and ahead of the 25th for the deadline. This is just, indicating that the company has an active and routine engagement with the SEC filings. It's reasonable to question, to ask, given this, scrutiny around SMCI right now and their obligations to meet these filing deadlines. But I think, given what we've seen here, the amount of capital they're able to raise still, whether it's misplaced or not, the CEO's confidence in being able to meet this deadline. And, we haven't heard otherwise. So until, we see something different than what's being said and what's being shown to us, I fully expect them to file next week. Now, what happens, what the verbiage is in the filing, whether there's major amendments to the preliminary data that they've already shared with us, or the data that was in the 10Qs prior to EY dropping out, that will be part of the full year 10K. If there's any major changes there, it still could be negative, even with the release. If we see, income, drop off a cliff, their margins, are wonky. But if everything comes back, relatively in line with what we had seen previously, and what they had given us, the tidbits of information that they had given us, I expect that it'll be received positively. And let's just look, let's look at the chart. And see what it looks like today. All right. So here's the chart for today. You see it more or less moved with the rest of the market. I mean, the entire market took a dump today. You see SPY over here, the charts for everything, Hood, SPY, SMCI, with a few, exceptions like Celsius. Everything had pretty much the same move today. There was an initial dip, there was some buying, and then we got news around mid-afternoon, whether it was policy related or the potential for a new COVID outbreak related, whatever it was, we sold off across the board in the market, except for like consumer staples and defensives into close. So I'm not really concerned that SMCI also did this, because everything did. So that's, it would be more concerning if everything else was going up and this was tanking. And let's just zoom out. This is what the daily chart looks like. Here's the yearly chart. So it did come up and get this gap fill a couple of days ago. I feel like I'd feel a little bit better if it hadn't done this for short-term upside. However, there's another gap up here that still needs to be filled around 86. I don't know if we could get there immediately, but I think given a strong SEC filing, I think we can get back above these lows where we saw some consolidation back in 2023 before we, the original dump that we started to take after SEC filing delays began in the summer of last year. So certainly I think we could get back above this 70 level. Again, like I said, if the filing looks good and is still in line with what they've already told us as far as their revenues and incomes are going to be for the 2 quarters that they've missed. And then I think the upside here would be this gap fill. 70s is probably expected. Gap fill would be 86, 87 roughly. And just from a technical standpoint, I feel like that would, short term be your max target. On a longer scale, who knows? The company still has to perform to continue showing growth. I posted a let's see, I can show you my X where I shared this. So nobody had consolidated from what I could see. All of the websites were still showing through the second half of last year, but nobody had shared in a form where you could visualize all of their quarters together, including the 2 quarters that they gave us preliminary data on. So I added the preliminary data here. Let's see. I can share it with you if you haven't already seen it. Okay. So here's the sheet that I put together. So I added the Q3, Q4, which is really Q1, Q2 of 25, I think, for them. But this is the missing data point. As you can see, their year-over-year growth still looks really good. Over 50% revenue, net income 14% growth. Their cost of revenue is up too, which is bringing you down a bit. They did spend a lot of money, and they continue to spend a lot of money building out their capabilities for manufacturing these and testing these liquid cool racks for NVIDIA that their chips go into. So it is a very intensive capital expenditure business, but it's still growing. Although you do see it start to turn down, which is a little bit worrying on a longer term time frame. But this is more of a setup just on the fact that it's been sold off so far. I think once we get the bounce post 10K filing, I think then you have to start reevaluating this company, based on that, a new value that has been put back in. If this were to bounce to 70 or 80, this PE right now, which looks pretty ridiculous based on these numbers here, because if you add in and take, what they've shared with us as truth over the last year, their annual EPS last year is like 2.5, which at their price right now is a PE of 23. That with, you don't see companies with 54% revenue growth guiding for $40 billion worth of revenue in 2026, a year and a half from now, when their market cap is only 34 billion. You don't see companies like this trade at a 23 PE. So I could see this, honestly, if the 10K comes out with these numbers, I could see this up 50%, which means the share price would have to be around $80. This PE should probably, with these numbers, should probably be in the 30s somewhere, because this is still a growth company. It shouldn't be trading like a value stock, which, I mean, used to be 20 PE was growth, but nowadays like a 30 PE is growth. So I expect this to come up post filing. But then, once we get that built back into it, I think then if it's in the 70s or 80s, you have to stop and think like, okay, is this company really still growing like they were? Because if you look at the quarter over quarter numbers, it's a clear downtrend from where it's been, and it's always been cyclical, up and down, up and down. It's like a sine wave, but recently it's started to merge into negative quarter over quarter growth. Now this may bounce back up like we have seen in the past, but we're seeing these growth periods are getting smaller and smaller, which tells me that a lot of their future growth is kind of built in. So while I think right now they are inappropriately valued based off the numbers and metrics that we have, if they are true, which we do not know, I think, beyond that valuation being priced back in, I don't know, 2 years from now, if I expect the price to go up significantly from where it'll be after this year. Now, if they grow into 40 billion revenue in 2026, yeah, sure. But that's a long ways off. And, I'm really just looking in the immediate term for what this may do. So like a dummy, because I was chasing my losses from my put credit spreads this week on Robinhood, I opened some long calls expiring next week, which is way shorter dated than I would normally like to do. But it is what it is. I took the 70 call strike mainly based on what we were looking at on the chart earlier. I think 70 is an interesting area. What was previously support before the breakdown occurred. And then beyond that, I'll probably set a stop if it does get up to there. and then just see what happens, see if it'll run, and try to fill that gap into the 80s. Because this does have a 20-some% short interest right now, which I don't have on my infographic, but that's another interesting fact about this stock is it has a very high short interest at the moment. So there is the squeeze potential here. And we've seen this in the past, going back, looking at the chart from early 2024, where people were trying to short this on the way up and it just kept flying higher and higher, over $100. So we could see that again. All right, well, that's just what we'll cover today. Just go over that 8K and the verbiage in there and just let you know everything looks fine. And I think this still has some room to run to reach a fair valuation, but it'll all come down to that 10K and what it says next week, if we even get it. If we don't get the 10K, forget it. It'll get cut in half and be back down at $20. All right, cool. Well, thanks everybody for your time. Hope you all have a great weekend. I'll talk to you later. Happy trading. See ya.